Bitcoin just ripped 15% this month. And you know what? Frankly, almost nobody is talking about the one specific level that's going to decide if this is the start of the next massive leg up or just a brutal trap before the next dump. Welcome to today's explainer, guys. Look, if you're holding BTC right now, or maybe you're thinking about going long in the US market, paying close attention to this specific setup could literally save you from the most common mistake retail traders make at this exact point in the cycle. I've been tracking this price action for weeks now, and by the end of this explainer, you're going to know exactly where a logical entry sits, where the math proves the thesis wrong, and exactly where to take profit. Oh, and just a quick reminder before we jump in, this is an educational explainer and my own personal analysis, not financial advice, okay? Always manage your own risk.
Okay, let's dive into this, because this right here is the billion-dollar question staring down every single crypto trader right now. Are we looking at a legitimate breakout, or is this just a classic trap designed to liquidate late buyers? I mean, the 68K level is functioning like an absolute brick wall right now. Retail traders notoriously get chopped up here, mainly because they trade on emotion, rather than a structured framework. Well, we're going to replace that emotion with pure, objective strategy so you don't get caught on the wrong side of this trend.
Here's our quick roadmap for today's explainer. First, we'll hit the macro context. Second, the breakout setup. Third, the counterargument. Fourth, risk management. And finally, we'll wrap it up with a recap.
All right, section 1, the macro context. So Bitcoin just surged a massive 15% in July. Right now, it's hovering right in that critical zone between $64,000 and $65,900. And look, this isn't just random volatility, it's a very specific, aggressive climb that has caught a whole lot of sidelined capital completely off guard. But to understand if this momentum can actually smash through that 68K wall, we really need to look at what's under the hood.
Now, what's really interesting about this is what's actually fueling the run. It really boils down to three primary macro drivers. First up, global liquidity is shifting. Second, and this is massively important for our domestic audience, USA ETF flows have been consistently eating up supply, which creates this steady baseline of institutional demand. And third, on-chain data shows significantly reduced selling pressure from mid-sized holders. They're basically just sitting on their hands, waiting. So all of this combined is exactly why the price has marched right up to that 68K resistance.
Moving on to section 2, the breakout setup.
But here's where it gets really interesting. Let's see how this builds a logical trading plan step by step, because you simply cannot just blindly buy at resistance. Step 1 is defining your entry zone. We are looking for a clear support retest, maybe a reclaim of a key moving average, or a definitive breakout confirmation above 68K with some really high volume. Step 2 is your invalidation level. This is your stop loss, guys. It's the exact price where the chart tells you, hey, your thesis is wrong, get out. And step 3 involves setting strict profit targets, scaling out to secure gains rather than just hoping it goes up to infinity.
And this brilliantly illustrates the real risk to reward math you absolutely need to survive in this market. Notice how the action is predefined for every single trade phase here. If we enter on a confirmed breakout, we already know our invalidation point to cut the loss early. If the trade goes our way, great, we hit target 1 and take profit at the next major resistance. We're only leaving a smaller portion of the position open for that extended target. By mapping this out visually, you completely remove the guesswork and you start trading like a machine.
Section 3, the counterargument.
Now, before we get too bullish, we have to look at the other side. I could be totally wrong about this breakout, and as an objective explainer, I need to show you exactly what would tell me that. On the left side, we have our breakout triggers, but check out the right side, the invalidation triggers. What actually kills this long setup? Well, a hard, high-volume rejection right at 68K. Or maybe a sudden macro shock in traditional US markets that drags crypto down with it. Or even a sudden wave of whale selling pressure hitting the order books. We have seen this exact setup fail in past cycles when resistance holds strong. You have got to be ready to flip your bias if the data changes.
Which brings us to section 4, risk management. I need you to burn this rule into your memory. Stick to the plan instead of moving stops out of fear or greed. Seriously, emotional discipline is everything here. So many traders build a beautiful, logical setup, just like the one we just covered. But the moment the price wicks down, they panic, they cancel their stop loss, and they just hope it bounces. Or it goes up, they get greedy, and they cancel their take profit to hold for more. The second you change the plan mid-trade, you destroy the mathematical logic of your entire setup. Just don't do it.
So the crucial point is implementing strict, unbreakable rules. Position sizing is your very first line of defense. Never, ever go all in on a single breakout attempt. You should only be risking a fixed,
small percentage of your portfolio per trade. And let's be incredibly blunt for a second about leveraged liquidation. If you're using high leverage on a long position right below major resistance, a simple 2% fake-out wick can liquidate your entire account before the real move even happens. Protect your capital first, grow it second.
Finally, Section 5, the recap. Here is your ultimate watch list for the coming days. Take a screenshot of this if you need to. Number 1, watch that 68K resistance wall like a hawk. Number 2, rely on the entry and invalidation logic we built. Please don't front-run the trade. Number 3, have your take-profit target set in advance. And number 4, monitor for those bearish flip triggers we talked about, like whale selling or macro shocks that would invalidate the whole bullish thesis.
The market is moving incredibly fast right now, especially with the US ETF volumes we're seeing. So here is my promise to you. If Bitcoin successfully breaks and holds above that 68K level, I am going to release a brand new explainer within 24 hours to map out the exact next targets. That is an update you will definitely not want to miss, so keep your eyes glued to the charts.
So what does this all mean for you? I really want to hear your personal analysis on this. Are you long right now, or do you think this entire 68K push is just a giant trap? Go down to the comments right now and drop a green circle emoji if you're playing the breakout long, or a red circle emoji if you think it's a trap. Let's see which side of the market is winning the sentiment war today. And hey, comment your own specific price target below while you're at it. I literally read every single one. Thanks for joining me for this explainer. Stay disciplined out there, and I will see you on the next one.